590 says, listed below are 4 accounts from a governmental fund operating statement. Discuss how and why these accounts will be adjusted when preparing the operating statement conversion worksheet for governmental activities. If no adjustments are required, explain why. So, let's walk through these. So, your expenditures for capital outlay equipment. How would that be adjusted?
Well, they're not expenses.
Because they're not expenses. So, if they showed up as an expenditure in your government fund statement, they need to be eliminated, right? Because they shouldn't show up on your operating statement. Okay? If you have capital outlay on your government-wide statements, it's going to show up as equipment on your statement of on your balance sheet, right? And it's called statement of net position, I believe. Okay? Does that make sense? That's doing the same thing that we did with the sale of land, in essence. Okay? So, if I say, think accrual mindset, right? If I say I spent $5,000 on a piece of equipment, what's my accrual journal entry going to be? So if it says equipment asset and cash, right? Or account payable if you paid on account or whatever. But you're not going to have an expense. So, on the government funds, you had expenditures called capital outlays, right? We remember this? So you have to eliminate that in order to convert it to the government-wide. Does that make sense?
So you would list them and then list like a reversing entry or something?
Yes, correct. Yeah, if you were going to show the entry. So, let's see. This asks.
Like on 568, it shows the capital outlay, but then in the general capital assets column, it just creates a reversing amount.
Right, correct. And they're doing the same thing, right? So under the government funds, they have general capital outlay, which is under the expenditures, right? So construction. And then for general capital assets, right, they're going to take that and smash them together. Okay, so that on their operating statement, they don't have anything. They're not showing an expense. Does that make sense? You're eliminating this expenditure from your operating statement. Okay? Because when you buy an asset, you don't have an expense. You have an asset. So this, your equipment is going to show up on your balance sheet or your statement of net position. You don't want the expenditures to show up as well on your operating statement, right? So we're going to reverse those off. Okay? All right? Second one, expenditures current general government. Okay, so if we have expenditures current general government listed on page 568, what are we going to do to that? What are we going to do to that? And the adjustments are listed on 566 verbally. So on 566 it says you have current operating, right? Governmental funds, current operating expenditures by function. You're going to increase it by any depreciation expense, if you have that. You're going to increase it or decrease it by any long-term liability when due expenditures. Okay? Because if they're long-term liabilities under accrual method, they're long-term liabilities, and they go on the balance sheet. Okay? They're liabilities. We leave them alone. We take them off of our operating statement. Okay? So here, our general government current expenditures would be increased by any depreciation expense recorded in the non-fund, right? It would be increased or decreased depending on what our liability was. And if you look on 568, they're going to decrease it by $2,500. because those are when-due expenditures that aren't expenses. Okay? They're when-due expenditures that aren't expenses. And 3B is outlined, that adjustment is outlined on 570, where it says 3B. It's a little smaller print. Okay? So you can work through that example. But that's how it's going to affect your general government current operating expenditures. Okay? And they'll be reported by functional area in your government-wide statements. Okay? Other financing sources, bonds. What are other financing sources, bonds? In the government statements, what did we do? In the funds, how did we record those? As the other changes. Remember, they were kind of near the bottom. So if you look on 568 again, you'll see other financing sources, and you'll see the 1800. See that? For 1.8 million.
Yeah.
You see that? So now we need to eliminate it. Why? Why do you think we eliminate that from our government-wide operating statement?
Because they're not revenues.
Because they're not revenues, right? That's right. They're not revenues. Does that make sense?
Yes, that makes sense.
You're so smart.
They're cash inflows, and that's why we had recorded them on the government funds under the modified accrual method. But they're not revenues, so we're not going to record them on our government-wide statements that are under the accrual method.
Now, is that because it's money that's for a certain purpose, or?
No, that's because think of it as a liability.
Okay. Well, yeah, because you have to pay it back.
That's right. When you take out a liability, you don't count that money as revenue.
Okay.
Right?
Yeah.
So again, when we started, most of you, all of you, were in the accrual mindset. We had to shift out of that to the modified accrual mindset for the government funds, right? And we went back for the enterprise and internal service funds, okay? In the government-wide financial statements, they're also reporting in the accrual method. So we have to take those government funds that were in the modified accrual method and move them back, adjust them so that they're in the accrual method. Does that make sense?
Mm-hmm.
You're in essence moving from cash basis to accrual basis accounting.
I vote for moving everything over to accrual.
You let the government know that. See how far you get.
I vote for turning our nonprofit company into a for-profit.
In order for it all to go into accrual, you'd probably have to fire half the government.
Hey, sounds good to me. Let's go.
Okay.
That's how they get their job.
So we had in essence what is this expenditure was for assets. So we're adjusting that off. Here we have income or money coming in that we had recorded as in essence a revenue that we're now adjusting off because it's not really a revenue. The fourth account, other financing sources, proceeds from sale of equipment. And your problem gives you a note at the bottom. It says assume the cost of the equipment sold was $185,000 and the accumulated depreciation was $170,000.
So you just subtract the 170 from the 85.
Okay, and that gives you
15.
15. So what does that 15 represent?
The carrying value.
The carrying value. So how does that 15 affect the 30 when you're adjusting it to the accrual basis? If you are carrying it at 15 and your proceeds from the sale of equipment are $30,000, what's your gain on the sale of that equipment? 15. Does that make sense?
Yes.
So just like we did with the land, in this case we have accumulated depreciation, right? So the cost, the historical cost, was the cost of the equipment was $185, right? We adjusted it by the accumulated depreciation of $170. That gave us 15. We got $30,000 for whatever this piece of equipment was that we sold. So we actually have a gain of $15,000. Okay, and you can see that